Welcome back to another video, guys. This one's going to be absolutely value packed. You've been asking me in the comments and I've been holding back, but finally I'm going to be breaking down a full 1-minute strategy I utilize to trade my sessions. Now, I truly believe that anyone can make it in trading. It's all about building processes to make decisions. And if we can break down the market into processes, then it becomes easier to make decisions in the market. Of course, I'm going to be going over the most recent days of my trading. I'm also in a trade behind me now as well, as you can see, short Euro USD. I'll be taking you through the exact processes that I used to take that trade today. Whether you're a beginner or whether you're more advanced, you will take away some key lessons from this video. I want to break down my full 1-minute strategy that I utilize. Now, typically, I only keep this reserved for members of Not Just a Trade, but I know you guys in YouTube really like to see how I'm trading the 1 minute. And today we're going to break it down in full. I'm going to be going into the processes that I use in order to make good decisions for my session. I'm all about finding the correct direction for the session. Now, I may not always be correct, but I strive to make good decisions and to find the correct direction in my session. And we can do that using repeatable processes. And let's get into that right now. In order for me to trade my session consistently, I need to have repeatable processes that allow me to make the same decisions. So I'm going to give you my top 2 processes that allow me to make repeatable decisions every day. The first thing I'm looking for is intention. Intention is going to be one of the key drivers to understand the direction for the session. Am I bullish today? Am I bearish today? Intention is going to give me that understanding of the direction that I could be looking towards. Is that higher prices or is that lower prices? Most importantly, when we think about intention, we must think about the why. Why is this our intention? It's really important to be making consistent decisions, and intention is going to allow us to do that. Making it slightly bigger so we can all understand exactly what we're looking at here. We want to understand why. Next, I care about location. Location is going to be one of those things to help me understand what is the probability of today's session. Where am I located for current price delivery? This is going to be my biggest understanding on if I'm in a high probability session for a direction of the intention to be shown, or if I'm in a low probability intention for the session to be shown. This is definitely going to influence my expectations for the session. And actually, this is something you don't hear traders talk about. Most traders are only focused on looking for signals for their entry. But I know my entry based on location is also going to equal my results. And if I'm constantly taking trades in low probability locations, then I'm likely going to get low probability results. One thing that I do try to do is always look for higher probable days, and they're the sessions that I favor the most. So here we are, just 2 simple processes that we can start to utilize for our session. And as we know from my previous video, if you haven't watched it, the trades that I take are always going to be pullbacks of intention shown. So price is going to be moving in one direction, price is going to pull back, and my entry is going to be likely in and around that pullback location, following a repeatable process. And it's in today's video that I'm going to talk you through that in detail. So let's get straight into the sessions, and I can talk about how we utilize these processes. So we're going to start off with my Wednesday session from last week. Now, I've left my trades on purpose. I've left my markings up on purpose because I want you guys to think about this picture. I'm going to remove it all, and we're going to get into this delivery in price and start to make ourselves familiar on our processes here. We're on a 5-minute time frame right now, and we utilize intention and location. So let's get an idea on the intention that we're seeing right now in the market. Quite clearly, the intention is to the downside. We can see that price ranged, and then we had the initiation to the downside. We created that low in price, and then coming into Wednesday session, we can see it was pulling back from that low location. So how do I identify locations on my chart? Well, I'm always looking for swing points, swing high and swing low. These are going to be those important levels in price where we've seen price reverse and move in opposite direction. We know that the people who control price are heavily participating at these locations. So when we do get given an A to B in price, we can be confident on what we're being shown. So what location was we in for London session? Well, we can see that based on our previous bearish A to B, that price was located in discounted prices. So naturally, if price is low in price, I'll be looking to buy price back up. I definitely don't want to be selling in low prices. I'd want to be thinking about buying from discounted prices. We are in a discounted price where we can start to think about higher prices. We are also bearish at the same time. Coming into the session on Wednesday, I was essentially presented with a market that is in that bearish intention. But what do we also notice? We also notice coming into our session that market is ranging sideways. So this is Frankfurt session, 7 o'clock open. And we can see here that over Asia and the close of the previous day in New York, we can see that prices moving sideways. So that identification in price is exactly what I would do. We identify intention in the market. So here we identify that bearish intention, and here we're identifying sideways delivery. We know that when we're sideways, most of the time, we're going to see a reaction from the high of price, from the low of price. And this is how we can start to utilize the processes that I mentioned earlier, location, intention in our session. Overall higher time frame, we can see we're bearish. On a lower time frame, this is exactly what I was trying to follow, that bearish delivery. And like I said, my entry is always going to be based on the pullback. What do we see here? I'm just going to mark on 8 o'clock session, and we can see price moving back up into a previous range. If you look at this move, we move down here, intention is shown. We can see this fractal delivery lower time frame using the same processes. We had that range initiation to the downside, and then when price pulled back up into that level, notice it pulled back up into a point of mitigation. That's where I look to take my entry into lower prices. We can see in hindsight that this trade did not play out. I did manage to get a break even on this trade. In terms of finding the direction for the session, we can see pretty much I just found a high, which became calls over time, which we then saw price run the high, and then we move lower. So the session intention, let's say, I wasn't wrong in terms of the direction I was looking for the session, but that high didn't go on to take previous lows. And this happens within our session, that's perfectly fine. Typically, I'm only going to take 1 to 2 trades in my session. We can see here lower prices was a part of that process. Notice where we see lower prices coming from. We see it coming from the edge of the range. Well, we did identify that market is in a range. If I'm going to be participating in price is in premium, then I'm likely going to be looking to take sells in that location, right? So here we have premium, we have discount, and we have the middle. And where was my trade located? Preferably, I would want to wait for price to move outside of this range to be in a good opportunity. We don't always make the perfect decisions, but one thing it's important that we make repeatable decisions. I'm going to drop down to the 1 minute here. Price is moving back into points of observation. If you know our processes, we know we look at ranges, and here we can see a range initiation. So that would be one observation. Here we can see range initiation. So again, that would be a second observation. And here we can see the high in price. That would be the third observation. Coming into my session, 8 o'clock here. So you can see naturally, for me to be in this position was purely based on time and opportunity. When we think about, like I said earlier, that A to B in the market, we can see prices pulling back up to the edge of the range here. And this is exactly where I took my position. We can see on the higher time frame, it wasn't necessarily the edge of price, but on the lower time frame, where we saw that session range delivery, I was looking to participate in a good location, and that was from a high. So you could say that it was a low probability location, but a high probability entry based on the location of the trade. This is definitely what I'll be looking for in these kind of middle of the range slaughterhouse type trades. I'm not going to perhaps stay out of price, but I will play the opportunity that presents itself. And nice and easy here, we run above a previous high into a previous range. I'm looking for the opposite intention. What can we see? Higher time frame, we continue lower. Moving into our next session now, New York, we can see we have, again, a range initiation. So we have that A to B created in price. If you focus on most recent time frames, we can see here we create a low, A to B, we pull back to 50%. So once again, if I was looking at the market at this time, this would have been a nice, easy entry to play lower prices. I would have waited for market to slow down and then played the continuation for lower prices. But once again, notice that price is pulling back after showing that intention. And in the location here, we can identify it as being 50%. And if we are playing continuation, then we know we're going to be looking around 50% for that continuation play. So not a trade that I was involved with, but a part of the understanding, observation of my process. And we can see the next move down. This is a 1 minute chart. You can see the next move down is a intention shown. And then when we put our A to B on in that delivery, We can see price pulling back into 50%. That range is also presented to us for lower prices. And now we can start to take this opportunity. So you can see here, my trade in that 50% location with my stop above the previous high. These are the processes that I talk about on a consistent basis. Safe stop, we want to know how to place a safe stop. When it comes to entry in the point of mitigation. So we want to know how enter the trade. When it comes to trade management, we need to know how to manage our stop to break even. So you can see here that I was in this trade, market then took the next previous low that was presented in the market, and that's where I moved to break even. So we need to know how to manage our trade to break even. This is a 1 minute chart. That was a 3.2 pip stop. And we can see here we're being highly accurate, highly precise based on processes that we're utilizing. So here, a trade taken at the edge based on how price was delivering sideways. And here I'm taking a trade at 50%. That's the end of Wednesday. Great understanding, higher time frame, lower prices, and then being able to present ourselves in that extension direction. Absolutely superb. Following the exact same intention I had in the session. So we can move on to the next day. We can see here, I'm still in this trade coming into London session, and I won't bore you with the job of being a trader, but for some reason I didn't TP on this trade. So moving into London session, it was actually a situation where I had a trade running. That doesn't typically happen very often. It's quite rare. Normally I'm TPing in my session. So coming to London, I'm already in a trade, and really it was a bit of anxiousness, let's say, in terms of seeing how that trade would play out. But what I did try to do was just push that to the back of my mind, treat that as a previous session, and focus on the day that was being presented to me. So once again, let's just pull this back. This did eventually TP, so we don't really need to focus on that position. We can start fresh and understand how could we present ourselves in this session. We are on the 1 minute chart, so I have this zoomed out slightly more. I know the candles might look quite far away from you. But what can we see here? We can see this kind of sideways delivery that's being presented to us. This type of delivery is very noticeable, very understandable when we're being presented a sideways market like this. And we can see market moving sideways and then moving into lower prices. So lovely, we can think about that as price creating a high and creating a low. Again, that swing high to swing low. Let's just get this on. This is how we're identifying price. You can see higher point, and point here. That obviously moves up and creates that higher. This is moving into our session. So nice and easy, lower prices. And now when we think of our frameworks, we think of understanding the intention for the session, and we think about understanding the location of the session, we can see that the intention is bearish. You can see market is moving to the downside. And when we come into London session, we can see where we're located for 8 o'clock. We are located at a middle of the range. So you can see from my previous days of trading, I've been trading the middle of the range already. Now, I focus on trading series, so I focus on series of 10 trades at a time. And in that series of 10 trades, I'm always looking to make decisions that are majority in high probability locations and not in low probability locations. Now, I don't always get the opportunity to make that decision because London session can consistently present itself in the middle, and I'm not going to take no opportunities. I'm going to take high probability trades in that location. I want to make sure that my series is not full of middle of the range trades. If it is, then at least I do is ask myself, why was that trade taken? And most of the time, I'm always going to say it was following intention. So here we can see price creating lower prices here. You can see price mitigation to mitigation to mitigation into lower prices. And then for the session, we start to pull back. And then London session comes up here. We can see that price then pulled back. Think about what's being shown here, high to low, a pullback in price, and that's where my execution has been. We can see that it was taken off of this lower time frame range for that mitigation, and we can see that this trade moves back into break even. What was we doing here? We can see that we had that intention shown, we had direction for the session, location, again, lower time frame. We can see that we're trading now higher up in this sideways delivery. So this is good. We want to be selling high. Overall, it is the middle of the range. So again, for a probability perspective, this is another low probability location for the session. We do our best when we're trading London session because it doesn't always present us in high probable locations. We can see that price moved back into our previous range here. mitigated and we saw a continuation to the upside. Notice that when we are breaking that previous high, the market's not extending. So let's look here. Another entry. Why is this entry taken? We can see price slowing down. Where is it slowing down? I'm always interested to see where price slows down overall. And we can see here we've got a previous range in the market, and that range becomes a point of mitigation where I took my entry. Start off really nicely in terms of point of mitigation. Again, stop above the previous range high here. And when we're looking at price, you can see price ranging at the point of location, and then the execution is being taken. We can make consistent good decisions, trading at good locations, and think about the intention in the market. As I said, the reason why I'm shorting here is because of that intention that's been shown following the higher time frame trend, and we can see prices holding and moving here. I don't trade Fridays. I only trade 4 days a week, Monday to Thursday, straight to Monday. And that is Monday this week. We want to focus on the location for our session. So we can see that last week we was presented a continuation of lower prices. And as you know, I consistently say we want to look for those swing points in price. And what can we see here? We can see a swing high to a swing low. And it's here on Friday where market started to pull back. And we can see for London session here at 8 o'clock, where was we presented? Well, let's draw on that type of structure that we have. Yes, we do have that bearish intention as we saw previously. But what have we noticed again coming into London? We noticed that price is sideways here. So once again, price kind of presenting itself in a poor location again for me. This is a new week. And so then I have to make decisions based on that observation. So coming into the session, we was at a point of mitigation. Notice that price is pulling back into a previous range in the market that showed intention. Price pulling back into that location. You're seeing that mitigation run for lower prices. Now, this was right at the start of my session. If you notice that we are in the middle of price, so for me, I don't want to take this trade. Why? Because my previous trades have been in the middle, and I'm not trying to stack up my trades in the middle of price. I'm actually trying to be more patient. Price then starts to move into the low of the range. We can see we have a previous range here. Market is moving into it and showing signs of higher prices. So let's go down to lower time frame. Let's look where my entry was. So here we can see intention coming from the middle of the range. We're starting to get that move to the upside. You can see that range creation, price pulling back. Remember, guys, I'm always taking my trades on pullbacks. These are the best and most highest position trades that we can take following the intention direction. So here we have the mitigation for higher prices, and I took that continuation for higher prices. We saw Monday was really a range bound day. We saw a continuation of that sideways range. So great to be in that understanding. And if he was to continue trading in this day, we would focus on trading the edges. And we can see price is reacting out of those locations. Not the best day for price. Pretty much sideways for the rest of the session. So moving on to Tuesday. Again, Tuesday this week, it's a very fresh delivery, a very similar process here. So we know that we was at a low from the previous market over here. We was low in price, and now we're starting to move to the upside. So thinking about my intention and location, my top two processes, let's have a look here. We can see that market was in this range. And what did we notice? We noticed that price moved back into a point of mitigation here and then started to create higher prices in the session, which moved above the previous day high and presented us in a trend-like situation. So what can we see? We had a low, we had a high in the market, we had that lower low be presented to us, we had a higher, a new low, a new high. We came back in to mitigate that 50% location, and then price created a new high in the session. This is a bullish trend that we're starting to see in the market. Tuesday was really a 50-50 day in terms of trying to make a good decision, but we can see here that when we look at London Open, if I just pull this back over here to 8 o'clock, you can see that we are located quite high here in price. So naturally, as I said earlier, if price is high, I'm always going to look to sell in location. So here we can see that price is high. The only reason why I didn't look for sells from this location is because, as we mentioned from the previous week, we did have our swing high to swing low in terms of narrative, in terms of location. We can see that this location is more 50% than it is the edge. So in terms of getting short here, I'm not highly biased for low prices. If we was in premium, then yes. But since we was in discount, I was actually trying to follow the continuation of higher prices. And what essentially I'm saying is that prices created at A to B, and now price is starting to pull back into 50% of that sideways range. It's very normal for price to do after creating an A to B. So when price is moving back into this location, I'm trading into it versus trading away from it. So trading into 50%, likely cause is going to be created here. We're going to see price range and show its next intention. So let's just go down to lower time frame. Let's look at the entry that I've taken, and let's look at the intention that was shown. So again, always looking for intention in my session, following the higher time frame, trend, delivery. We can see here, price is showing a nice intention to the upside, and then we start to move sideways. So let's just mark off that intention, that high to low, and we can see that over time, price is kept on creating new highs. So we'll just continue to mark it off until the high that was created, and then we start to pull back. So what do you notice here? We pull back, and I'm just going to delete this off. We pull back, we take out previous lows into a point of mitigation. Notice that this is around 50% of the range, and notice that we have a range at 50%. So this definitely caught my eye in terms of potential execution. At first, I was a bit wary to take the opportunity. I was actually looking for shorts, lower prices based on this delivery. But what we did see was price break lows, lack of extension, and then price moving into a point of mitigation. One of the processes that you've heard me talk about already is price moving slow, point of mitigation. And that's exactly why I entered here. It's because we're getting that slow delivery point of mitigation. So now that we have that, we can start to think about, okay, what comes next? We start to see that intention drive into the market, and where from a point of mitigation following that intention shown. So notice that the decisions are always being made on the intention shown in the market. If a trader was short here, I could understand. But again, the location on the higher time frame is low probability. So we would think about that and consider that in taking that trade. Here we are, another day, another process executed well. Looking at, again, notice that prices pulling back here over time. And that's where I'm starting to get into that opportunity. Okay, next we can see I did get into another short here. Where is that? Towards the edge of the range. If you notice here, price is moving from edge to edge, back into the edge here, higher prices. This was actually an unmitigated range. What do you see? Price moving above previous highs, slowing down in that location, and then I was looking for lower prices. I did actually get taken out for that break even. This has been the theme over the past week. One thing I'm grateful for is the experience over time, because I've been through these situations before. This is nothing new. I've been through it many times. Over time, I've just learned to adapt with the information. So here we are, another New York session, and we're looking at another trade taken. What can we see here? We can see the intention shown in the market, pull back, again, run above a previous high, and getting into this location. We're getting in at a previous range. We're looking at a safe stop above a previous high, and then we're focusing on the continuation of that direction. If you notice, the entries at a pullback into a range, right? All of these trades and the representations of what you're seeing are all based on the same concepts. This trade did actually go on to win, and I was thankful for this trade. I might put a clip up now of this TP in. Thankful for this continuation trade that I got into following that move for lower prices. This was actually 50% of the previous bearish A to B in the market. So it's actually this location I'll start looking for continuation in price. And that's all I did. Played the previous highs to create previous lows. The pullback is always going to yield the best RR in a trade. Nice Tuesday TP. Very standard in that move. And we can see then price started to create higher prices. And now today, this brings us on to our most recent delivery now, and where we can start to, again, apply the same processes that we was able to utilize to be in this position. As we can see, the market has already created a new low. So let's understand, how can we be in this delivery? Hopefully we can see this on this video. So what can we see here? We can see price creating, again, intention in the market, A to B in price. And that A to B has created a range, low prices, and moving into the session, this is what was presented with. So actually, if we was just to scroll out here and say what was presented before our session, we can see that come 8 o'clock, price was taking the previous low, right? So there's actually new live delivery presenting to us. If we was to look at what happened prior to the session, we can see that market was moving sideways here, and then we started to move into the low. We reacted, so we can see clear sideways delivery. And then coming into London, what happened? We saw that price pulled back, we ranged, we initiated, So we're seeing new intention come into the market. And then once again, we're able to understand the location of the move. So what can we see here? Lower time frame, prices creating ranges. We're moving away. We create a new low in the market and the market starts to pull back into higher prices. What do we have here? We have a range. We have a move above a previous high. We have a point of entry. Notice that this is at 50% looking for a continuation. Here is a range at that location, looking for lower prices. Safe stop above the high. Again, look at the position in the market, looking for lower prices. Now, price does actually move lower here, but only up until the low, and then we start moving in the bullish direction. Now, for me, I am bearish overall. If we go look at the higher time frame weekly, we can clearly see that I am looking for lower prices. Me and the community was live on Sunday, and I was telling them exactly how I would like this week to play out. And of course, as I was doing last week, I'm looking for continuation sells to the downside, following that higher time frame delivery. So what can we see here? We can see a nice mitigation continuation. Price runs lower. Now, traders can TP on this. I aim for extended targets, and that's a process that I've consistently done for the past 3 to 4 years now, and it's something I've stuck to and will continue to stick to. My max pip stop on a trade is 3.2 pip stop, so I only need the market to move 32 pips in my direction in order to hit a 10 RTP. Now, sometimes this happens, sometimes it doesn't, but this is a process that I consistently utilize in my session. We can see this trade taken slightly out of the session, but let's see how this market's set up. We can see here, lovely move back into 50%. We had that failure to create the low, and now where do we move back into? We move back into higher prices. What can we see in higher prices? A previous range. We can see a high there, safe stop. We've seen the intention be shown. We can see the location is high probability, and this for me was another great trade following that bearish delivery in price. If we just zoom out here, this is what we've been involved in since that move from yesterday. So high, new low, lower high, low, lower high, lower low. So we're following that trend delivery that has been presented to us. And this, for me, was a very ideal trade from location, looking for low prices, and obviously we're now waiting for that TP to come into the market. This is what I do every day in the community, and you can see exactly how I make these decisions. They are repeatable based on processes. It's so important as traders that we're able to make good decisions at the right time, in the right location, following the correct intention. And hopefully now you can see the full breakdown of my 1-minute strategy, and you can start to utilize the power of this process. If you like this exact type of entry, then join me in the Discord. I go through this every Thursday, every Sunday. We break down the markets in its entirety. I'm also trading with the members every London session, looking for opportunities, trying to be a part of the right intentions. I think this is a great opportunity for you to level up your skills and present yourself with the skill that can get the results that you're looking for. Do not seek the results until you understand the skill. And with this repeatable process, we can do that time in, time out, and trade our sessions accurately.